Welcome, everyone. Welcome to Take Stock Live. Going live every Wednesday, 15 minutes after market close, getting toward the end of season 3 here. Next week, we have on April 7th, Great Panther Mining, GPR, High Gold Mining, HIGH, and Char Technologies, YES. After that, we'll be off for a week on April 14th, so you can take a break. And we'll be wrapping up the season the week after on April 21st with Take Stock Social. Now, this is a new feature that we're introducing, inspired in part, I guess, by the Christmas party that we had at the end of last year. We're using the same platform called Remo, which gives you a chance to sit down across a virtual table with your friends and fellow investors, as well as connecting with and grilling some CEOs after watching their elevator pitches. So it's sort of a working party in a way. It'll run for about, we'll start at roughly 2 p.m. on April 21st and run for 2 or 2.5 hours. If you want to join us for that, please just go to our website, takestocklive.com, and scroll down a little bit and you'll see the similar image. You can click on it and that'll take you to the registration page on Eventbrite. If you register there, you'll get a ticket and you will subsequently receive an email with login instructions closer to the event. So it's coming up on April 21st. Also letting you know that on June 9th, we are planning on running, coming back for an in-person event at the Petroleum Club, modified suitably to meet all the provincial requirements. June 9th, put that in your calendar. So at this point, I'd like to thank the TMX Group and TSX Venture Exchange, our event partner, for helping us keep the conversation between companies and investors going in these very unusual times. We'd also like to recognize the vital support provided by our core sponsors, Fasken, MNP, Lee Jones Cable, and Olympia Trust. Thank you very much to all of them for making this event happen, the whole series actually. We'd also like to thank our extended network for their support. Thank you very much to Calgary Meg and CIM, to Sterling Capital, and to many others. And we'd like to particularly thank, for their contribution, the Newswire and Investment Pitch Media for helping us get the word out. So at this point, I will turn over to my friend and colleague, Mark Francis. Why don't you take it away, Mark?
Thank you, Raj. Welcome all, and some housekeeping matters. You will note a red Reconnect tab at the top of your screen if you lose audio. Just click it, and you will be reconnected. The chat board may be utilized in this session. Please be clear as to whom your question is being addressed, and I will try to get to them. Note our disclaimer. This presentation is for information only and is not a solicitation to buy or sell stock. Companies pay fees to present at Take Stock, and Take Stock, its principal Raj Joshi, and yours truly may have equity investments in companies which present, may consult to the companies, and make no representation or investment or other recommendation in regards to these presenting or any other companies. You should do due diligence. Go to SEDAR, connect with the companies directly in order to get detailed information, look at the financial statements, and seek professional investment advice. Contact details for the presenters can be found on the chat board and already live and will be posted at the end of today's show and also on our website, takestocklive.com. Our presenters today, Garfield McVeigh, CEO, Constantine Metals, CEM, and Kevin Keogh, CEO of Evergold, EVER. First up, Garfield McVeigh, who received his BSc Honours, First Class in Geology from Queen's University at Kingston in 1972, and has the commensurate degree of experience in gold and base metal exploration in Canada, the US, and Central America. I think that adds up to more than 45 years now, Garfield. He participated in the discovery of the Hoyle Pond gold mine by Texas Gulf and Timmins, contributed to the exploration and discovery of the HW deposit and several new zones at Westman Resources' Buttle Lake massive sulfide mine on Vancouver Island, and was a founding member and CEO and chairman of the board of Rubicon Minerals Corporation from 1996 to 2006. He has been president and CEO of Constantine Metal Resources since its formation in '06. Grew up in a small town of Haileybury in Northern Ontario. His dad was a consulting geologist, so he and his four brothers were cheap labor during the summer field seasons, and his great uncle Ed Grant, a mining mill builder and past mining manager, actually made it to the Klondike in the early 1900s and brought back some gold. So Garfield, over to you.
Thanks very much, Mark, for that introduction, and also thank you, Take Stock, for inviting us to participate in your forum. As my frontispiece slide suggests here, this is a bit of a new Constantine. Constantine's been pretty quiet for the last year or so, post high gold spin out and COVID. However, we've been very busy behind the scenes. So I want to update you with what Constantine's been up to. We're now have been certainly with the spin out of our gold assets. We've been mainly a single project company, but as the slide indicates, the front piece indicates that we are looking and have brought on a new gold opportunity that I'll talk to you briefly about. Forward-looking statements. Obviously, we're in the business of making forward-looking statements, so we caution people about to that fact, and that's all I'll say about that. Just as a quick corporate snapshot, a good technical team. We're rebuilding some people. We've shared people since the spin out of High Gold. Got a good share structure. A great project endorsement at Palmer. Our partner, our JV partner, is Dowa Metals and Mining. They're Japan's largest zinc company with a 50% interest in the project. And also we completed our first PEA in 2019, which was a post-tax NPV of 266 million, so quite robust and a good starting point. Some really good shareholders, as you can see on the lower right. And, you know, really Constantine's got solid fundamental value and lots of exploration upside, as I hope you'll appreciate by the end of the presentation. I do highlight too in the front here, we just announced yesterday our budget for 2021. It's US 8.8 million. And that budget is fully funded by Dowa Metals and Mining. And we manage the project, so we do make a management fee as well. Where are we? We're in a very prolific metallogenic belt that which hosts one of the world's richest VMS deposits, Greens Creek, and one of the largest, Windy Craigie. There's two currently active mines in the belt, Kensington Gold Mine and the Greens Creek Mine. And they also highlight the AJ Mine, which maybe a lot of people don't know about, but it was a very large gold producer in its day. At one time, probably the largest gold producer in North America. Stopped production in 1944, but produced a total of 3.5 million ounces with quite a bit of silver and has at least that much in inferred resource. So it's of significance because we have a gold target up in our neck of the woods that has some similarities. At Palmer, right now our resource, we've got two high-grade deposits, the Palmer deposits, which consist of the South Wall and the RW, and the AG zone deposit. And the indicated resource is just about 4.7 million tons and a total inferred resource of about 9.6 million tons. So it's a global resource of just over 14 million tons at decent grades. And also these are highly zoned deposits, so you get some really silver-rich areas, you get copper-rich areas, you get zinc-rich areas, which ultimately are important in your mining plan. So just to show you the lay of the land, terrain is definitely an advantage where we are because with the distribution of the deposit, we can actually access from the bottom and mine up. So we use gravity, and it helps you deal with the fairly steep terrain that we're in. So you can see where our resources are, the AG zone off to the left, the South Wall and RW in the center part of the picture. We have currently road access to a proposed exploration underground portal site. Shown kind of in the lower left, and you know, also we're in the PEA, the 510 level conveyor portal would be sitting The PEA has, we're highlighting a few features here. The yellow stuff is probably what's most important here, but 7% discount, 266 million US. These are all US dollars, by the way. The operation was based on a steady state of 3,500 tons a day. I think that was achieved after the second year or so. And a capital cost of 278 pre-production. Sustaining capital costs would add about 140 for a total of 418. You can look at the grades and the metals recovered there towards the bottom. The prices, just for your information, at the time, $1.22 zinc, 282 per pound copper, 1626 silver, 1296 gold. So the metal prices are obviously better right now, but they are cyclical, so you have to have a project that can handle those cycles. Just a quick sensitivity analysis. I'm just pointing out here that really our biggest sensitivity is the metal prices. Operating costs less so, but the metal prices overall, and zinc being the more impactful sensitivity for metal prices. But obviously, right now, we're on the upside of this, on the positive side of this graph for sure. So our 2021 budget, just to give you a quick idea, 8.8 million US. The drilling program, total of about 6,000 meters, 2,500 meters of resource upgrade drilling. This is going to be done in the thick down dip copper-rich portion of the South Wall resource, and 1,800 meters of exploration drilling to explore for the fault offset of the South Wall, which I'll try and explain to you quickly to follow up here. And 17 meters of geotechnical drilling to support planned underground exploration and provide information required to advance the project feasibility. Important engineering and environmental studies, seismic surveys, overburden drilling to establish overburden stratigraphy and extract more hydrological information, groundwater monitoring wells, avalanche studies. So lots of other stuff happening as well. Our infill drilling, just very quickly, you can see where when you look at the long section here, the up dip, the darker kind of reddish color up dip is our indicated resource, and you can see that the amount of drilling of the drill intersections in the upper part a lot more common than the lower part. So the lower part of the deposit is quite poorly drilled right now. However, we got some of the thickest and highest grade intersections right at the very bottom of the resource within that red block area that come up against a fault we call the Kudo fault. And so one of the key things we're looking for is the offset of this very thick south part of the South Wall deposit. Exploration drilling, again, what I want you to get out of this is you can see the Palmer deposit to the north, and those are the actual outline of the deposit as currently drill defined. There's a fault we call the Kudo fault, and on the south side of the fault, there's two current interpretations we're working on in regards to where the offset might be. One of them is based on fault systematics that suggests the deposit is shifted slightly, mainly lateral, mainly a left lateral movement, and to the right, on the right side of the picture. And then the other option is the Jasper Mountain target, which is to the left. But regardless, if we can zero in on this, it will have very big economic implications, because you can see where the proposed underground exploration ramp is, and will be very amenable to the existing Palmer deposit resource, and obviously be able to tie it into the underground mining plan very quickly with some success here. Gold opportunities very quickly. This is really just to show you the spatial relationship of where the gold opportunity is relative to the Palmer deposit. The Palmer deposit on the left, the McKinley Creek Falls and Gold and Eagle prospects. You can see them labeled there. And the Porcupine Placer operation that's produced plus 82,000 ounces of gold over a 100-year history is kind of the yellow the yellow ribbon part of the creek there. So it's been a very high-grade placer operation, and it's an immature placer. So it's a lot of production for such an immature placer. And essentially, we see our McKinley Creek and Golden Eagle as the source, obviously one of the potential source areas for the high-grade placer gold. And so it's very efficient to work on this relative to our Palmer VMS project. Big Nugget Gold, the basic parameters, black shape. Yep, 15.
I'm afraid I've let you run a little more than the 9 minutes.
Oh, okay.
So,
okay.
Okay. Show us a final slide. We can see the 53.7 grams, and good.
Okay. And just the catalysts I highlight here. People can look at the presentation, catch up with the catalysts here. But the big budget South Wall resource upgrade, significant South Wall offset discovery would be very meaningful. Potential big nugget drilling at the gold target, and maybe more acquisitions. We've been very successful as management to do that. Thanks, Mark.
Okay, good, Garfield. Thank you, Garfield. Now we have Kevin Keogh. Mr. Keogh established Evergold late in 2015, but parked the company for several years to focus instead on founding Evergold Corp in 2016, which is currently being bought out for more than $400 million by Newmont Corp. I followed that, Kevin, and I didn't invest. Darn. Mr. Keogh was directly responsible, along with CJ Charlie Grieg, who led the exploration team, delivering both the Saddle South and Saddle North copper gold discoveries achieved in 2017, and which now hold combined resources of more than 20 million ounces of gold equivalent in all categories, and are likely to grow further. He began his career with Anglo American Corp in De Beers, founded PC Gold and launched it in 2008, subsequently acquired by First Mining, and has more than 40 years diverse business experience. He couples a technical background and international experience with expertise in project and public company management, finance and capital markets, communications, and business development. Kevin, it's yours.
Thanks very much, Mark. I'll walk you through the story. Thanks for joining us here today, everyone. I see we left off the forward-looking statements bit, but I'm sure you've all read that in tremendous detail on lots of other presentations. So we'll just cut to the quick here. We have 3 flagship properties at the current time. These 2 that you see here on the left, the Golden Triangle play, that's Snowball, and on the right over there in the Toodoggin, that's Golden Line. And they are, of course, linked by the Stikine terrain. So these are northern BC. We've also got a new property we picked up down in Nevada recently. It was not planned. It came to us rather fortuitously. We took it on. All 3 of these properties are epithermal style. I'll walk you through Snowball first. Snowball is a precipitous property. Noranda did some work on it years ago. The backstory is that we took their data, modeled it, decided that the source of the really impressive anomaly, gold and silver, that they had was not down there on the right at Snowball Pond. It wasn't down here, but it was rather up here along Snowball Ridge and Pyramid Peak. So we set out to drill last year there for the first time. We drilled here from a single pad, the Apex drill pad. Really tough drilling up here, couldn't tell where the values were coming from. So we decided to build a pad we could drill 360 degrees from, and we hit right out the bat. We got narrow high grade mineralization. I'll back up again here briefly in what we're now calling the C zone. But the key takeaway from this is that although the market didn't get too excited with the early results, we believe we're right on top of the system at virtually the highest levels, not only of the property, but probably the system. And post the drill program last year in early September, we did a lot more work down here in the so-called C-zone sweet spot, and we got really impressive outcrop. So that's where we're going to focus this year. We think we may be able to hit it in the next phase in a way that we didn't last year. So just briefly, these are some of last year's numbers. Genuinely high grade, pardon my sloppy scribbling there. This is what some of the material looks like. Lovely material. Arsenic is a key pathfinder. We've got high grades and rocks all over the place. This boulder here is a big boulder. Got to lug it around with 2 arms. And we've got a lot of really nice numbers. It's both a gold and silver play, and it is an entirely new system. We're on top of the mountain, and we believe it could go a long way down. Next up is the Golden Line property. Again, that's it over on the right there. We've got 2 trends in place, all related. We don't understand it yet, but the key takeaway here is that we've got already a drill gold zone about 800 meters long, dimensions of over 150 meters wide, running to depth, low grade overall, but that zone as it stands could carry a large number of ounces. And we think, based on the geophysics that we did here, just in this area, after the drilling wrapped up last year, that we're sitting on top of potentially much better. And we're going to hit that in the next phase drill program too. Just to give you some of the some of the numbers we had last year here, this consistently long intercepts of low grade material with higher grade material within it. So it has a lot of potential. We're just scratching the top. And this is where we think the real juice could be. This is our drilling from last year, is all of this stuff up top here. And you're looking at geophysical results that we did. And this is the real juice that we're aiming for in the next phase. This target, by the way, carries a geophysical response similar to that we had at Saddle for GT Gold before drilling it. This is a plan view, and it's a hot looking target. So a large gold zone in place. We think we're scratching the surface. Phase 2 gets us right into the guts of it. We have a camp in place there. This is a view of it, ready to go. Now I'll move over to Rockland, Nevada briefly. In many respects, it's kind of similar to Golden Line. This gold zone that you're looking at, that's a leapfrog model. BHP had this asset years ago. It's a big 800 meter long drill gold zone with dimensions approximating 200 meters. This is a cross section through it. It is what we believe to be the high grade, or at least the low grade halo over a potential high grade Midas or sleeper mine style boiling zone. So it's carrying the trace element signature here, arsenic and a variety of other trace elements, plus gold and silver, that suggests it's much better down there. So that's the immediate target. We've already done our modeling, completed that. You can look at some of these numbers later. They're really impressive, these historical 183 meters of 0.4, and within it, you get genuinely high-grade material, 1.5 meters of 20 grams, etc. So this is a story that's just getting going. There's an old mine on the west side of the property. We believe we've got an intact system on the east side here at Rockland East. This does not outcrop to surface. It's a little deeper down. So it's not bulk tonnage we're after. We're after high grade play. And this won't get drilled though until next year. So we financed ourselves in February, raised $8 million. We've got about $7.5 million net after paying the financiers. We're going to be putting 2,500 meters into Golden Line, first phase, IP, as well as quite a lot more sampling. Snowball, similar scale of program, and the drilling will start at Golden Line first, followed by Snowball in July. And we'll be on the ground at Rockland in May, that's in Nevada. But the near-term upside in terms of capital gains is potentially going to get you or come from Snowball and Golden Line. Briefly, to wrap up here, we've got about a 31% ownership position in terms of institutions now. Us insiders, a nice whack, 11%. Retail is a remainder. Fully diluted, we're at about 114 million shares, a little more than I would like in terms of warrants, but it is a potential source of future money if we really hit well this summer, and we're hoping to. We have a really strong technical team. CJ, Charlie, Greg, and I have worked closely together for years now. Darwin of High Gold, of course. Alex, Geophysics. Rosie was ex-Voisey's Bay and worked with Ross Beatty and these people. So we're well set up from a technical perspective. We can raise money, we can deploy it to good effect, and that's the near-term story for Evergold. Thanks very much.
Thank you very much, Kevin. And stay with us. Let's bring Garfield back for the Inquisition.
Okay.
So Garfield, there we are. Good to have you. So my first question for both of you regarding the next phase of your exploration, is it partially funded or fully funded, and what would be, just come back to us again, I think you touched on it, but what would be the expected timelines for next results? And let's start with you, Garfield, and then Kevin.
Constantine, is the $8.8 million US program is fully funded, and it will be fully funded by our partner, Dowa Metals and Mining. Over and above that, we also make a management fee as operator of the project. So that management fee is certainly enough to cover more than our G&A, and also feed some funds into any exploration needs that we may have. So it's and the other comment about that, Palmer's basically a 50-50 JV right now. Dowa, by funding this next 8.8 million US, will dilute us by just over 5%. So instead of a huge equity dilution at our current share price, we're able to dilute project-wise with minimum project dilution.
Yes, and Mark, as far as our programs, we are fully financed. Phase 1 at both Snowball, 2,000 meters, as well as 2,500 at Golden Line. It'll cost about $1.5 million for the Golden Line work, the drilling part of it, plus the about 1.2 for Snowball. And we've got quite a contingency. That's phase 1. We've also got actually over $2 million set aside to immediately scale those programs up if we really get successful.
Okay, and now let's run with a couple of questions for Garfield relating to your PEA. Garfield, what is the historical correlation of your particular suite of metals? In other words, to what extent would the metal mix serve to reduce price volatility relative to that of just, say, zinc alone? Your mic, Garfield.
If I interpret your question right, Mark, these deposits, VMS deposits, are highly zoned. And so if you understand the deposit properly before you go in and mine it, you have the opportunity to possibly selectively mine zinc-rich areas, copper-rich areas, or silver-rich areas. And so, and ultimately you can blend those resources as well. But these particular type of deposits are significant in the metal cycles because it does give you selectivity during the mining process.
And aside from that, Garfield, does that is the volatility? I mean, zinc and copper and silver don't all move together. They can move somewhat together, but somewhat differently. So have you got any statistics on the reduction in volatility by having your particular metal mix? You haven't done.
No.
You haven't done work on that. Okay, that's fine.
No.
Okay. What about on the cost side? Have you done sensitivity on your operating costs? What will be your biggest costs and the biggest potential to create changes to those costs? Yeah,
we've done sensitivity. Like operating costs are, like when we look at our operating costs, the sensitivity of them relative to our metals, for example, are relatively minor. And certainly, the basic operating costs, your mining costs at Palmer, the cost comes essentially out to about $64 a ton. That mining cost, people will look at it and say, well, geez, that seems maybe a little low for an underground operation. But at Palmer, we've got some really thick stopes, and it's all long hole. There's no cut and fill involved at Palmer. So we see the opportunity of essentially being long hole and in very, very thick zones and the fact that we can use gravity, we're going to mine from the bottom up. You don't need a very expensive shaft to start your operations is very significant at Palmer.
So in terms of the sensitivity to costs, what you're saying is there's not much that will move in the cost, at least as projected in the PEA, or is energy a primary cost of your $64? So that's where my question is going. What are the key drivers to the costs that you have?
Well, energy, again, because we're close to a deep sea port, moving that concentrate, but energy, we're looking at LNG. We can bring LNG in because it's a deep sea port at Haines. So we're, if the costs, we could improve on those costs if we, there's several different local hydro sources that could be considered to develop if there's enough demand for that hydro. So when you look at those costs, you can have a significant positive impact on the project.
Okay, let's switch to Kevin for a bit. And Kevin, let's talk about your board. It's very strong geologically. Who is the financial driver on that board?
Well, whoever came up with the question it's a good question, Mark. We are actually probably going to supplement our expertise in the area of finance at some point later this year. But at the minute, it's really a combination of myself and Rosie, because although I'm trained as a geologist, I spent virtually all my career bird dogging deals through the 90s in high tech finance. And Rosie actually, even though she's a geologist, spent a lot of her career raising money for geologics and some of these other companies, that were feeding the junior resource sector. So both of us have a lot of finance-related experience, both with the books as well as the actual process of raising money. But as I said, we will supplement our board as we grow the company. We're going to add to it in some of those key areas.
Okay, and let's talk about your priority project as defined by allocation of resource funds. Pretty close on the two in northern British Columbia. Can you repeat the dollar commitment for each of the projects? And then I have a follow-up question on
Sure. That. Well, at the minute, I would tell you we don't have a priority of those two. I mean, you may recall we did an IPO late in 2019, and it was predicated on 2 technical reports, not one. And that was kind of unusual. That was because we were never able to really differentiate which one of those 2 properties really stood above the other. It just, and funny enough, consequent to last year's work, we still don't really see a big diff between the 2. Golden Line is obviously the much bigger potential property in terms of the scale of the land holding, but as you know, you can hold a lot of resource in a relatively small area. And Snowball does have the potential to hold a very high grade resource in a small area because we're so high and it's running down into the mountains, kind of like Garfield's VMS there, although it's a different style, obviously. So no priority at the current time. We split the current budget more or less between the 2, and we will see. I do expect by the end of the summer, though, things will have clarified somewhat.
Okay. And on Snowball, given the topography, just looking at it, and I'm not a geologist, but you want to drill primarily in one direction, but I think I noticed also in the opposite direction in a couple of cases. Given the topography, do you have drill locations that will give you access to achieve your objectives, or are you going to have to compromise a bit on drill location?
Oh, we've pretty closely cased out where we believe we can drill right there. So you saw where we drilled last year. That was our first kick at the can. And we chose that location mainly because we could not tell the orientation of the structures that we believed were there and responsible for all this high-grade talus. We think we know now that there's a particular trend to the C zone, the Charlie zone, northwest, southeast, rather northeast, southwest on that particular zone. Within it, you've got different orientations, but the best of what we're seeing is that circled red ellipse I showed you on the PowerPoint. Within that area, we think that might be the core, the sweet spot, and we can drill it. We'll probably have 3 or 4 pads focused on it, and we'll try to drill the system, kind of scissor the holes, because we're not sure yet even which way this thing is going and what the plunge is. There's a lot we don't know yet, but we can drill it.
Okay, and have you established what you think you know the constraints? Because you seem to have shown some constraints on the map that you showed. Do you know what the constraints for mineralization are at this point?
Take that all with a grain of salt at the minute. We do understand it better now than we did even at the close of last season, because we've been able to do more soil sampling and modeling of our actual results and to try to determine what's going on. So again, it's likely to be the case, and we see evidence of that in the drill results. We have multiple vein sets of different orientations, but they are probably occupying a structural zone that has that southwest northeast C zone trend. This is similar again to Saddle, where we had Saddle South. You know, it's got a complex set of veins there that are all over the place in terms of orientation, but there is a principal orientation to the structure there, which is east-west. So yeah, we have an understanding, but I'd still call it kind of preliminary. So expect things to change.
Okay, good. Garfield, a couple of questions here. First of all, on barite, which is relatively new to a lot of us and even to a number of geologists in Canada as an economic driver of a project. Do barite prices fluctuate much, or are they relatively stable as an industrial mineral, I'm assuming?
Yeah, no, you do see them fluctuate a fair bit, and obviously with the demand and depending on the oil rig activity does affect the demand for barite. However, the barite has been designated a critical mineral by the U.S., and the reason for that is they import essentially about 80% of the barite they use. And so I think that's significant for future uses of barite is the fact that they don't want to be so reliable on other countries for the barite supply. So I think that kind of helps to smooth out the demand situation a bit. And you know, we're finding that there's interest by oil producers themselves. We've had questions from producers about, well, when are you going to be able to supply some barite? So it does sound like there's quite a bit of interest out there, but it is an industrial mineral, so it's kind of you know, it's a bit of a different world when you're marketing that, obviously.
Okay, and on your drilling this year, more than half of the planned drilling is to upgrade the existing inferred resource. Is the current plan to proceed to production based on the current outlined resources of approximately, you know, just ballparking around 1 billion pounds of zinc equivalent plus another 2 billion pounds of zinc equivalent in the inferred? So are you at this point conceiving of a project and driving forward of that scale?
I would say yes. When we signed our deal with our partners in the $22 million US deal for DOA to earn in 2013, they were keen to try and move the project ahead as quickly as possible, but they wanted to get their arms around essentially 10 million tons. And they felt that once they had their arms around 10 million tons, that it would be time to evaluate the project underground. And so that was the next step for them. Even that far back was to think about underground exploration once you're at 10 million tons. So we're now between inferred and indicated, we're well above that. DOA's got a huge amount of history in these kinds of deposits. They mined the Kuroko district, you know, deposits for more than 100 years. So they have a feel for I think, for the greater global potential of these things. That they're very comfortable with what they see, with all these numerous other targets that are really remain undrilled on the property. So ultimately, I think they're very comfortable with the fact that this thing's going to keep growing, and let's get underground and understand it right now. And with the expectation that, yes, there's enough there now for a 15-year mine life or so, and we're going to keep finding it for many years.
Okay. And is the exploration incline part of this year's work, and can it become the mine portal?
It's not part of this year's work. We're still, although we have a permit in place, a waste management permit for our underground access. There was a big court case in the U.S. Kind of that affected, it's not specific to Palmer, but it was a court case that affected how people discharge water, how they deal with septic systems and things like that. That resulted in us kind of saying, well, let's take, with our discharge system for underground, we were looking at what's called a land application system. And so we thought, well, let's look at this. Let's take some time and look at this before we actually go ahead. And so the timing of things actually has worked out quite well, because we've been able to do a lot of additional hydrological work and understanding the hydrological environment as far as as far as the underground goes. So we're looking at underground probably not next year, but probably the following year or later next year. But we'd like to start early in the season on the underground. Okay,
good. Kevin, let's hop back to you for a couple of questions, and in particular, thinking of the Golden Lion. Could the deposit type be other than epithermal?
It's possible. Again, I think it's fairly early stage at the current time. It looks epithermal in terms of its mineralogy and the vein sets, veins, the silicification and all that we see. But it's always possible that it could be more complex than what we think, right? It comes back again to Saddle, where we ended up with fundamentally it's an epithermal style, but it's maybe intermediate between low sulfidation and high sulfidation. And then we also turned up right close to it that massive porphyry, totally different style. And we don't necessarily believe they're related up there either. So let's see how it unfolds. We just don't really know everything, or maybe a little uncomfortable speculating too much at the minute until we know more.
Right, understand. Now, I'm not a geologist, but I did notice that on the gold and silver soil anomalies, that they did not coincide perfectly. Does this possibly represent zonation, or does it represent a different degree of transportation of the different minerals in the soils?
No, I think that does represent zonation. It seems to be a fairly strong zonation that way. But again, that picture's confused. It's clear that there's a kind of separation of those trends along part of the GL1 main target area, but you'll also notice that in the core of the area that the two kind of coincide. And also, we're not really even sure at this stage. There's, you might make the case that the overall trend is northwest southeast, but there's clearly an east-west trend right in the heart of that area too. And our geophysics, as I pointed out before, suggests that the best of the system may be just below and slightly down to the southwest, i.e. kind of along that east-west axis. And we are getting suggestions of trace elements like arsenic to the west as well. So this system may blossom out to the west, southwest, in addition to continuing northwest and southeast. And there's also something else going on 800 meters to the north at GL1 North Ridge, which has got a really strong golden soil, true soil anomaly. And we actually put a hole in it. We won't have results from that hole probably till June, but that looks really encouraging. So all of this anomalism is probably related, whether to one structure or a couple of structures and or intrusives lurking there as well. So,
and you've now mentioned a couple of different orientations. Is this going to make it hard to decide the orientation of your drill holes there this summer?
No, not at all, actually. I mean, we're going in the first work we do this in drilling work this summer, obviously we're going to nail the high chargeability, and it's an actual coincident chargeability and resistivity anomaly just down from where all the historical drilling has occurred to date. So that's a pretty straightforward target to pick off, and we're going to pick it off quickly. And we might have some other news soon too, if we can get our hands on the results for GL1 North Ridge, because there should be something. The tenor of the gold and soil anomaly up there is so impressive that there has to be something going on of significance there too. So it should be exciting. I mean, it's always an exciting time of the year, right? We're starting working toward the next phase, and the last year is beyond us. I tell people the stock is weak, buy it now. It's going to be higher probably with the awareness building we've been engaged in, and the real excitement could come in the next phase of these two programs.
Okay, a question from Jim Davis, and I think that is there any mercury in this epithermal deposit?
None whatsoever, as far as we can tell, at either of them to date.
Okay. Back to you, Garfield. The Big Nugget seems to lie east of Palmer, and the AJ similarly seems to lie east of Greens Creek. Is this due to stratigraphic similarity, or is that more likely just coincidence?
Well, that's an interesting observation, Mark. But yeah, I it could be coincidence. But the geology, the setting of both deposits is very similar, and obviously you've got a base metal, the Greens Creek base metal deposit and the AJ mine kind of opposite each other, and we seem to be sharing that kind of geometry up at Palmer. But there's lots of developments in kind of the age of some of these sedimentary rocks now with detrital zircon. So I think some of this work is going to kind of unravel whether it's more coincidence or not. You know, some of these rocks may actually be somewhat different in age than originally expected. But right now, there's remarkable similarities between these two environments. And on one of my slides, I did show there's the Chatham Strait fault there. That if you restore the displacement on that the U.S. has they've got some pretty good control on the amount of displacement on that fault. That if you restore that displacement, what it does do is bring Palmer Big Nugget much closer to Greens Creek and the AJ. So that's kind of an interesting observation in itself.
Okay, and a final simple question for you, Garfield, before I go back to Kevin. The logistical access to Big Nugget, is it as simple as it was as it is for Palmer? And what is the topography like? I mean, the topography of exploration is a little bit challenging for you with those rugged mountains. Is Big Nugget a little easier topographically?
Yeah, it's definitely quite a bit easier, and it's quite a bit lower in elevation as well. So those two factors are both a benefit. And it's just it's about 2 or 3 kilometers from our Big Nugget camp as well. So we've actually got a trail cut into the deposit, into the Big Nugget area, and the corridor that we see where the potential is quite modest terrain relative to Palmer itself.
Good. Thank you, Garfield. And let's talk a bit about rockland, Kevin. For the geological lay people, your map made references to rock types of TR and JGR. Could you identify these and explain their relevance?
Oh, I'd want to turn you over to Charlie Gregg for a lot of that, Mark. Let's just say that it's kind of a typical Walker Lane structural setting there, where you have intrusives, granitic intrusives that have come up there, as well as rhyolites and such like into the sediments. So there's a mixed bag and quite a lot of faulting going on as well. What they had on the west side of the property at the old Rockland mine, which was mined at a small scale in the cowboy days between about 1870 and 1930. What they had there were classic high-grade quartz carbonate gold silver veins, and it's pretty much a mix of the two, surrounded by stockworks that are much broader, and so they just took the high-grade stuff. We think on the west side there that they were mining the lower levels of the epithermal system. In contrast to that, about two miles to the east at Rockland East, it is blind on surface. It's kind of typical Nevada-style pediment there, you know, where you're getting off the hills into the sediments and washed over areas. There, we appear to have the intact system below, and that would be high-grade quartz veins, structurally controlled within a complex of lithologies that we haven't actually drilled ourselves yet. So,
okay, another question has come in. This one for Garfield from Michael Marchand. What is the seismic survey about?
Seismic, the infrastructure that we're looking at and the land application discharge of the waters. What the seismic will do is it will allow us to. It'll give us a profile of the overburden thickness and bedrock, how deep the bedrock is, and so we're going to collect information down Glacier Creek Valley that'll give us that information. And it's interesting that Glacier Creek Valley, it's had at least 3 periods of glaciation over the last 30,000 years. So the creek, when you look at Glacier Creek, it's actually riding on top of a very thick sequence. From what we can tell, we've done some limited seismic already and want to expand upon it, but it's riding over top of previous glacial deposits from the previous glacier advances and retreats. And so understanding that overburden stratigraphy is very important. It obviously also has implications in understanding your hydrology and infrastructure as well. If you're going to be building a mill, you'd like to be building it on bedrock, but if you can't, you want to certainly understand the structure that the overburden you're setting things on.
Right. And let's give one more to Kevin. We haven't tested for. Oh, I see. You've just responded there, Kevin. But I do have another question for you. Do you have any other projects that you have not yet discussed?
We do, actually. We have Holy Cross, which is southwest of Prince George, and that's a never drilled. It's never been drilled. It's a really large, we think, intrusion-centered system. It's got a large alteration, zone of alteration over top of it, silicification, a lot of pyrite. It seems to be leaking gold and copper over a broad area, but it's never been drilled. And so it intrigues us. It's sort of 60 kilometers or so north of Blackwater. Maybe it could be similar in style, we don't know, but we would actually like to do about $150,000 worth of IP work there this summer. So that's going to happen. We're going to try to nail down some of the underlying structures, perhaps, as drill targets. And then we also have Spanish Lake, which we almost never talk about because it's got a sub-economic gold zone, a typical Caribou style. It's actually identical alteration to what Spanish Mountain Gold has. They've been trying to develop a mine there. I presume they will. It's sediment-hosted gold and gold only, and the most altered-looking kind of messed-up argillites you've ever seen. And We're intrigued because another company spent over $1 million to drill it in the depths of the last mining recession, and they, you can argue that they drilled into an entirely new Spanish Mountain style zone, and they left it at that. They didn't even file an assessment report, and you could argue that their best results were on their last holes along the fringe of whatever it was. So, you know, it's not a priority because of the grades, but it's rather intriguing. So we'll see what evolves there. Okay,
very good. And just closing, very brief answers from each of you because we've run a little over time, but this has been a great Q&A session. So first Garfield and then Kevin, for what milestones should investors be looking in the next 3 to 6 months?
Well, we're going to be busy, obviously. Our exploration program will start early June, and so we'll be drilling right off the bat, and we'll be having one of the drills will be set up on a one pad called the KD pad, and we'll be doing the entire 2,500 meters of drilling for the down dip part of the upgrade on the resource. So we should be getting intersections fairly quickly after the program starts. The problem you've got, obviously, is estimating the turnaround for assays. It was brutal last year, and hopefully we can get some mercy on that turnaround this year so that we can report assays more quickly. But last year you were obviously looking at 3 months for a turnaround and sometimes more. So if you're getting results late June, July, August, I would be let's say you start getting results mid to late August is hopefully with the labs being more teed up. And then, so that, yeah.
Okay, and Kevin.
Oh, sorry, I lost my train of thought there, Mark. Repeat, please.
For what milestones should investors be looking in the next 3 to 6 months? Just a couple of obvious milestones.
Drilling, right? Drilling, nobody cares about anything except drill results. So like Garfield, it'll be drill results, especially we're going to try to do things a little differently this summer as well. We may deploy both the big mother of the drill as well as some of the smaller drills just to try to get news flow sooner than later. So we're trying to shake things up as far as the assays. Well, we'll all cross our fingers on that. I saw somebody put out assays today, Garfield, from Yukon, which they finished in August, September. I mean, it's ridiculous. So, yeah, it'll be exciting. I tell you, people, if they should get themselves positioned now ahead of the start of the season, because we probably will appreciate just on anticipation alone, and they should take some off the table before the drill results come. Oh, we can't hear you.
Yes, the buy on mystery and sell on history. Yes, indeed.
I mean, the results could be great, but there's a strategy to these juniors. You don't want to. Recoup your capital before the news. Huh?
Yep.
So
indeed. Well, it's been a great session. I want to thank both of our presenters today, Garfield McVeigh, CEO, Constantine Metals, CEM, and Kevin Kiu, Evergold, EVER. May you have further success in advancing your projects and businesses. And to you, our attendees, thank you for your time today. Do go to today's company's websites, learn more about them, go to CEDAR, look at the annual information circulars as well as financials, and check in at takestocklive.com. Today's PowerPoint decks should be posted there by tomorrow. We'll be back next week for the final formal session of the season, 7th of April, and then do go to our website to register for the REMO session on the 21st of April, a chance to connect with fellow investors and likely a slew of geologists as well. And you'll get to ask the CEOs questions after their elevator pitches in small groups of tables. Register, think about June 9th, put it on your calendar, and in the meantime, be determined in your due diligence and ask tough questions. This is Mark and Raj signing out from TakeStockLive.com.
Thanks, everyone.